Hey there, it's Tracey Barrett with the Focus on Nova Real Estate team, and I am really excited to bring you the mid-year update for the Northern Virginia area. The great news about the mid-year update is obviously it covers January through June, and we have the help of our esteemed association, the Northern Virginia Association of Realtors, along with the Center for Regional Analysis at George Mason University. They work in collaboration every year to give the mid-year forecast, which was just released. Please check out the link in the article and you can read the whole thing for yourself, as well as get down into the nitty-gritty on various county information, etc. So where are we? Most frequent question I get asked in a social setting about my career is, how's the market and are you busy? The answer is, yeah, we're real busy. We are working hard for our buyers to get them into homes, and our listings are in general receiving above ask sales prices with multiple offers. So let's get into why that is. According to the Northern Virginia Association of Realtors and the GMU-CRA, Center for Regional Analysis, we've got a couple of things happening. So I'm going to quote directly from their article that they were released, mainly because they're the experts and they got it right. And then what I can do is give you anecdotes about what we're seeing from our team perspective. So essentially what they're saying is that overall the economic conditions remain favorable, but with mounting risks due to continuing monetary tightening by the Federal Reserve Bank in response to stubbornly persistent inflation. Anecdotally, according to today, and today is June 12th, what we are seeing is the Fed just announced that the inflation is actually the lowest that it's been in 2 years, which is enormous. So with that being said, the inflation had continued to be high, so you're seeing declining profits for companies across a wide range of different industries, as well as a realization of layoffs that are being announced over and over by some of the largest technology firms in our area. The mortgage rates have pulled back somewhat from the recent highs that we saw, particularly in fall of 2022, but they remain about 300 basis points higher than pre-pandemic norms. Translation from us is that pre-pandemic, you were seeing interest rates in the 3% to 4%, and today you are pretty lucky if you can get somewhere between 6 and 7%. As of this morning, some of the conventional 30-year fixed rate mortgages were right around 7.25%. Clearly that impacts affordability. So as expected, the higher interest rates are impacting both your buyers and sellers. The buyers are having to react and adjust to less affordability as the interest rates have creeped up. In the meantime, you have sellers sitting tight on their properties because they're sitting on interest rates that are at the 3.5% marks, if not lower, which makes inventories super tighter, even more tight than the pandemic, but with slightly and only slightly softer demand pressures. Now, with that said, while pricing remains strong because of those demands that we have out there, the lack of inventory has dropped by about 20% across the entire Northern Virginia region. So the bottom line is, as the more purchasers have dropped out, more sellers have stayed put, and we are in this stalemate for demand for good properties. So let's hit the bullet points over at Northern Virginia Association of Realtors and the George Mason University for Center Regional Analysis. Again, you can check out their link that we have in the article if you'd like to read the whole thing and see the graphics. So what's happening? Demand will remain soft. However, there is so much pent-up demand that it suggests that we will continue to have sellers. Buying a home is still the most sound financial choice for most households, as opposed to rents, which continue to escalate and be higher and higher. It's expensive to live here. The next bullet point they have is that the inventories will just continue to get tighter. As I said earlier, your current owners are sitting on interest rates if they took the opportunity to refi or purchase when they were at the 2.5% to 3.5%, and a lot of folks are simply staying put because the affordability is there. The third bullet point is that the unit sales will continue to decline, and it won't be as sharp as what we saw last year in the third quarter of 2022, when the interest rates went from roughly 5.5% in April to a shocking 7.5% in October. So instead, what we're going to be looking at for 2023 springtime inventory is a decline from roughly 10 to 15%, which again just speaks to the buyer demand that is going to continue to be there. If you're a seller, it's a great time to sell. The final bullet point is that prices will remain stable with general expectations of modest rises. And this is what we're seeing. When we are pricing a unit well, it will sell quickly, many times at ask price, and even more times in a multiple offer situation above list price. If you get greedy or overstretch your sales price and it is not substantiated by the data, then you're going to sit on the market and not sell. Finally, after 2 years of rapidly rising prices, the market for single-family homes is starting to flatten out a little bit. According to NVAR and GMU-CRA, we are seeing a 0.7% price gain this year. So again, we've hit our peak prices, and while there is appreciation, the hands over fist appreciation for the majority of properties is not something that we are seeing. The total sales will drop 10% for the year as inventories remain unbelievably tight. And overall, our inventory will drop a shocking 13%. So if you're in the market to sell and you want to dig down to your specific micro market, because yes, it's Northern Virginia and there are pockets, and it's important to understand what's happening in your neck of the woods, to quote Al Roker, give us a call. Focus on Nova team. There are 7 of us on the team. We are here to do the data, walk through it with you, and let you know what the value of your home is. Please contact us today if you have any questions.